Welcome back to the stream, everybody. Man, I'm actually really excited to be back streaming. I took a break to get some programming done, some upgrades to range probabilities, helping out some guys in the trading group, get the hang of it. And I'd say it's been very, very productive in the Discord. Alrighty, you guys, let's hop right on into the expectations for the week ahead and figure out what it is exactly we're going to do here. What are some of the risks ahead of us for a few different assets, and what would be maybe some good prices to trade at based off range probabilities here. Keeping it nice, simple, and chill this stream. Let's see here. Isaac says Aussie dollar moved. Great. I have no reason not to expect it has. Actually, if I go over here and we sort by percent change, you can see Aussie dollar is the best performing asset today that's a dollar pair. Actually, yeah, it's the best performing one. I was going to say maybe dollar CAD. Let's turn down that music just a tad more. I was going to say that the dollar CAD potentially moved more. It moved more by 2 pips, but on a percentage-based change, nah. Aussie dollar is the king right now. And if you guys are not familiar with how range probabilities works, I am looking at the indicator and I'm thinking the top for the day could be in. It was a phenomenal run since the beginning of the day. It just opened, went down, I think 2-3 pips, and has run up, up, and away, all the way up to 63.8, it seems. Yeah, man. Nice catch, Isaac. Nice catch. And one sec here. Let me get you set up. It doesn't let me do it here through... Let's see here. There we go. Okay. There we go. Got you set up as a mod now, Isaac. You're all set there on that front. Just a little bit of maintenance here on the stream as we start off. But top for the day, and you're saying maybe top for the week. Let's check out the weekly range. Yeah, actually, yeah. And real quick, I'm going to change one little setting here. Turn off the current bin highlighting. And yeah, there is your peak in your distribution. So if you want to know how to read this indicator so you can follow along with the stream, the red spots are, simply put, the places where we have the highest probability of a top. And as I change time frames, that might be the top for the day, the week, or the month. And then it's the same thing down here, except for lows. Also, I'll turn off that little bin highlight setting. There you go. So all the green spots are the most likely spots to find the low for the week. Just a little statistics goes a long way. And so now you see why, when we were up here, I'm saying, hey, that's probably the top for the day, because this looks like a peak in the whole distribution of where highs for the day occur. And then Isaac's looking at this and saying, hey, we have a peak in our distribution here. And our top is right here in the range where the peak for our occurs. The peak for the week can occur. Now there is another peak down here, but you can clearly see we've traded above that. Yeah, I would not be surprised if this was the top for the week. However, considering some more fundamental actions going on with the RBA and the expectations for them to actually hike rates has been quite significant, and this whole rally has been in anticipation of that. In fact, if we use a different indicator real quick, we can actually see on the charts how rate hike expectations have changed how Aussie dollar is traded. So this is another indicator called the yield spread curve. And you can see that the yield spreads, so the yields, the bond yields in Australia, have been appreciating faster than the bond yields in the United States. That's what all this green here means. And then you can see all the different bond yield durations and how quickly each one has appreciated over different periods of time. Yeah, so bond yield spreads have been moving in favor of the Australian dollar. That's what the green here means. And that's been a bit of a boon. So those rate hike expectations improving for the RBA for an extra 25 basis point rate hike have certainly assisted in keeping Aussie dollar off of this downwards slope. And one thing we can do, actually, set this down to last few weeks. Yeah, and you can see how it's held up, hasn't gone straight down, kind of continuing this trend from way back here. It's still technically in a downtrend, but we will wait and see, because the FOMC is also expected not to hike. If you know who Bill Ackman is, you'll know he took off his US 30-year bond, I believe, short, which means he's no longer expecting yields on the 30-year end to rise, which is this little spot right here on the chart. Right? So he was thinking, okay, this is going to stop slower US growth. Yes, there is a bunch of relative risk problems, quite frankly, going on for assets around the world. In fact, when I was listening to, like, there were 3 podcasts that I've listened to on trading expectations from economists and asset managers, and then I read a bunch of outlooks. The one unique and primary concern that I found is exactly what you pointed out, Isaac. It's the fact that the relative change between growth and inflation of different countries is becoming the primary driver. A microeconomic aspect to watch out for that is how strong each country's labor market is. And I believe we're getting some employment data for the United States later this week. And I was reading some outlooks. I got sent a lot of New Zealand outlooks today, so that's kind of at the forefront of my mind. So when I go and I look at, for example, New Zealand dollar, and, you know, I'll go ahead and, you know, rub my ego here a little bit. Check that out. Yeah, guys in the trading group saw that one. What a good trade that was. Now, just because I showed you this good one doesn't mean I don't have losers. Let me pull up Aussie, right? There's one hit, I think. Yeah, so I got hit a couple of times here trying to take shots on the long side. And man, I wish I took more shots on Aussie dollar than New Zealand dollar. But that's simply because, and in all seriousness, I wasn't paying attention to the RBA rate hike expectations improving so significantly. Also, this was a very significant move. And yeah, taking little shots is fine. And I mean, I've made all this money back just based off this one here, and it hasn't even moved that significantly. There are risks that I'll tell you right now, there is no price in expectations of the RBNZ, which is New Zealand Central Bank, doing a rate hike. Not in November. November 29th is their next meeting. If we go here, turn on our yield spreads, you can see that the yield spreads don't look as green as they did for the Australians. So take both of these things into account, what's going on in Australia, what's going on in New Zealand. And if we go and we check Aussie New Zealand, wow, look at that. This is a great way of how to identify decent cross-pair trades. Just a bit of deduction between, here's what's going on in this country. Here's what's going on in that country. Wow, these two countries are moving in opposite directions economically. I wonder what impact that's going to have on their FX rate. And doing that type of deduction by staying competent about what it is of the things that you're trading. See, it's not just enough to grab an indicator and put it on your chart and think, oh, we're at a buy signal, I should buy. That's not smart. What's smart is knowing what it is you're trading. What's smart is actually relating with how other people think an asset will move and their reasons for why that thing would move. What are the risks around what could send something higher or something lower? And once you know those things, once you're very competent about doing that sort of deduction really, really easily, and you can quickly relate to why other people might have different expectations than you. You can understand why other people who are market participants, giving their own outlooks, think what they think. As soon as new information comes out that everyone's waiting for, that risk event is realized. That's a fancy way of putting it. That risk event is realized, which just means new information comes out. You'll be smart enough and have enough information about what other people are doing and thinking and how they'll react to anticipate, oh, here's this new thing, this new bit of information that we have. I need to update my beliefs, and maybe I need to change my position or double down on my position. At that point, whatever you do with your position becomes an autonomous decision. And that's a far more empowering approach than, let me give you an indicator, let me give you a macroeconomic theory. That's not what I'm here to do. What I'm here is to expose you to the different ideas of how different people interpret markets, including how I interpret markets. So, with that all said, there's the rant for the day. I think that was very productive. Yeah, man, if you enjoyed that, give me the thumbs up and let me show for subscribers and thumbs up and all that. Honestly, join the trading group if you really enjoyed that. Get access to these tools and the threads of everyone who trades in the trading group, including my own. All the research threads in the Discord are free, all the outlooks, all the major ideas are free. It's just where people get in and where people get out, and the actual trading part is usually done in the trading group. So you won't be missing out on any information if you're hanging out in the trade group. Let's see here. Terry. Oh, what was that trade indicator? Oh, this is just a buggy old thing that I made like 2 or 3 years ago, man. You can, if you want something similar to this, I would just straight up recommend using the drawing, the linear regression drawing, which I've forgot. Oh, here it is, under channels, regression trend. Use this. It's effectively the same exact indicator. See, they're overlapping. And Terry, you want me to check out gold for you real quick? Because I can do that. Let's go ahead and turn on our range probabilities. Oh. And go over to gold. Hello, James. Nice to see you. Wow, wow, wow. So this is gold for the month. It has gone off way into what I would call tail risk territory. So this is very strong momentum. Very, very strong momentum. And we only have one more trading day in the month before we get our new set of range probabilities. And what I mean by that is there's a setting in the indicator that allows us to see what next month's range probabilities will look like. So we just toggle that on for the high and toggle that on for the low. And there you go. Next month's range probabilities. If we go down to a 12-hour, shows us this week's and next week's. Oh, looks like the indicator timed out there for a sec. Loaded too much data. Let's go ahead and refresh the indicator here. There we go. I'm also going to turn off the next period range because we're not going to need that for, I don't know. It's only the beginning of this week, guys. We're not going to need it for a while. So let's see here. Gold, gold, gold. Well, right here is a peak in our distribution. It's not the worst idea in the world if you're taking shots here, but you have to be totally conscious that, oh, there's a peak down here. So price could bottom out here, or price could bottom out here. Based off what I saw on that daily trend, I don't know if I'm ready to start betting against gold myself. So I would lean towards probably going a bit higher this week. If we look at it on the day, that's what I was looking for. If my memory recalls, this was a decent spot to take a shot on the long side. You can even see these bottom wicks come in, right? Looking good there, range probabilities looking good. So yeah, I would not be surprised to see 211, 212 by the end of today. And what we can do, also on the side, is look at our closing probabilities. So we can find the probability of ending the day in one of these bins. So you can clearly see the blue spot. And this blue spot is the area with our highest probabilities in the whole distribution of where we can close the day. Which says, you know, this area roughly around 206, 208. So this is one approach that's very commonly talked about, called mean reversion, where let's say you were buying this low. Now you need to know where to take it. Well, you take it to the end of the period, or you take it to a high. So there's two ways you could draw this expectation. Right? So let's say you took your shot here. You're bought at that spot. You'd be shooting up here. So that'd be a lot of extra volatility. So if you have an expectation for an increase in volatility outside of this jump from the prior period, you're anticipating a more serial increase in volatility. 210, probably not out of the question. But if you're expecting a more moderate day with volatility that's similar to this sort of series over here, outside of this jump, then maybe it makes more sense to assume that we do something more like this, or even a bit below it. So we have like a very small red day, or a slightly positive green day. Let's see here, James, you're looking for buys to 2030. I don't know how 2030 is going to serve you. Depends on how that looks going out in the future. Oh, I see what you're looking at. 2030 is kind of at the edge of this peak in the distribution. I see. Yeah, that's totally in the cards. That is in the cards. And if you had that expectation right now, this also technically could be the low for the week on gold. So if that's your expectation, it'll probably end up looking like this. Yeah, let's turn on our little range thing, our little trend, linear trend finder. Yeah. Very close to how this linear trend is plotted. Alrighty, you guys. Pretty good first stream so far. Nice and chill. We've gone over some good charts. We've had our little boss ramp. And now that the stream is out there, it's going to show up in people's inboxes. Some people are finally going to get notified. Hey, boss is streaming again. Boss is streaming again. Oh, you were looking for buys at 1990 to 1980. Well, I don't know if you'll get 1980 looking at this thing. I mean, you might get the bottom half of 1980 if it falls down again. But yeah, that's definitely in the cards. However, I would probably shoot for a spot closer to 1980. Here, I'm going to change one little setting. So instead of looking back 3,000 bars on this low distribution, I'm going to let the indicator max out this number automatically for me. And it will look back as far back into history as it will. And it even shows, yeah, maybe when you include all available information that TradingView can load on this 12-hour chart, that maybe just sub 1980 is even in the cards here. And you can even see how these ranges, these little bins, expand in size. And they say, yeah, you know, this is a half decent spot for bullish longs. So if you're a bull on the rest of the week, this ain't the worst spot in the world, because that's effectively what this statistical distribution is describing, right? If you are bullish right off the bat on the week, 10% of the time, the longs come in right off the open, where the low comes in. And most of the time, you get a bit of a pullback down into this spot. And some of the time, or during especially bearish weeks, you're coming down much further. And then down here, this is all your tail risk. Isn't this a cool little indicator? Man, I was thinking no one would end up watching this first stream back. So I'll have to say thank you guys for watching the stream. It's been nice and chill. We've gone over some basics of range probabilities. And we've kind of gone over my general philosophy of how someone can approach trading and make their own autonomous decisions. So yeah, if you'd like to learn more about this and get access to the tools, hang out with me and other people in the trading group, go into the description of the video, go to the WAP store, and yeah, join the trading groups. All right, you guys, I'll say thank you very much for watching. I've been your boss, Joe Baus. And I'll see you tomorrow for another daily plan.